Sometimes this is the best trade you can possibly make. Our type of trading is very specific. We refer to it as SPY T trading, which is an overnight swing trade in which we're trying to take advantage of the overnight gap by amplifying it with options. And it doesn't matter whether we're in a bull market or a bear market. However, since it's a short-term trade, we do need to pay attention to the news. What is going to happen overnight after the market closes or in the morning, especially 8:30 in the morning when often government statistics or information is released. But sometimes it has to do with earnings. Google, Apple can be market shifting if things don't go our way. Although the indicator at SPYtomorrow.com has been doing really well, letting us know how the market might open the next morning during the first half hour, either up or down, there still is opportunity overnight for market changing news, and we need to be aware of that. And a great example is last week. Although the indicator was technically correct 4 out of 5 days, it was a really tough week to trade. Which leads us to this ultimate trade. Sometimes it's better to put on this trade rather than the SPY T trade. The day that was wrong was Monday. On Friday, the pressure read down. We had some big down days and it continued to show downward pressure. However, on Monday, we were up. But the following days were also very tricky because the next day we had Fed days, meaning Powell was addressing Congress, and that didn't start until 10 o'clock. So those days started extremely flat, waiting for the Fed. And that's a good time to maybe consider this very specific trade. Flat openings are really not very helpful for SPY T trades and really any kind of option trade unless you're an option seller. But if you're buying options, flat mornings or flat markets are not your friend. And we had 2 starting days in a row in which the market was flat. Again, Tuesday and Wednesday. And then we had Thursday, in which we had an employment report that ended up being negative, which was, of course, positive for the market. You know how that goes. The indicator said down for Thursday, and it started down all morning until that news, and then it popped up. And then eventually, after the market opened, it worked its way down, and we had another big down day. All right, so that means technically it was wrong 3 out of the 5 days, and we had 2 flat days that didn't help us at all. So we had 1 good day on Friday, and the signal Thursday night for Friday said down, and in the morning we had more 8:30 data, which sent the market further down. However, many of us on Friday didn't make our money back, although the signal was correct, because there was an IV crush. All the anticipation for that big announcement pumped the premiums up Thursday night. And once they announced on Friday morning, the premiums came down. So even though we were right, there was still loss to be had unless you were patient as the market continued down. For our overnight trades, we have a few trades that we focus on. The first one is directional, where position sizing is really important. And then we have our SPY T trades, which are trades in which we employ a hedge to protect ourselves in case the market goes the opposite direction. We have the SPY T A, the SPY T B, the SPY T C, the SPY T D, and the SPY T S. One of the downsides to a SPY T trade is the fact that we're buying both a call and a put, which makes it susceptible to that IV crush because both the call and the put could lose money in that situation. And if we're going directional, yes, we're going to feel the effects of the IV crush, but not at the same level as that SPY T trade. However, on most trading days, the SPY T trade works very well. However, if the indicator is wrong, well, you're going to lose money on the directional trade, where you could actually still end up making money with the SPY T trade. So we tried to avoid the IV crush and the 50-50 proposition of big news in the morning that could switch the market mood into the opposite direction. We often feel this need to trade. We have to trade. However, our goal is to preserve our capital and grow our capital. And if we can see the setup of an IV crush, it doesn't matter if we're right or wrong, we could still lose money. So there is a better trade. And sometimes the news is pumping up a specific report coming out Thursday, for example, and that's all they talk about, waiting for Thursday's numbers at 8:30. What do? Well, hey, if you think you know how that big announcement's going to go, play that direction. Ignore all the other signals. Go with what you think you know. However, if you see a big IV crush coming, meaning the premiums are being pumped up, it won't matter whether you're right or wrong. So you probably should employ this strategy. And it's simply this: don't trade. So hey, yeah, you don't have to trade. If it doesn't look like the market could go in your favor, or you have no advantage to understanding which direction the market might go, then preserve capital. That is a winning strategy. Rather than just guessing, preserve your capital for another trading day. Don't let that unfounded fear of missing out blow up your account and take you out of the game. And if you're a SPY Tomorrow member, you can trade off of the hourly pressure readings after the news is released. The best traders are patient. The best traders keep their emotions in check. They know they don't have to trade all the time. They wait patiently for the right setup. They're not going to trade unless they know that the facts, the indicators, the signals are in their favor. And if they're not, they don't trade, which again is often the absolute best trade that you can make. I'll see you in the next video.